welcome once again to the Dukascopy TV studio. I'm Ben Jones. Back alongside me for the second part of his interview looking at Swiss equities is Urs Beck. Urs, thank you very much for joining us again.
Hello, Ben.
So let's go straight in looking at Swiss equities. With after 3 strong years, would you say it's time for a consolidation?
In terms of technique, yeah, it was about time for consolidation. I think we have already seen a lot of that. The market looked very overbought in spring. After 2 months of sideways markets, it's not that there's not a big tension anymore in the market. In terms of valuation, we're around the average we've seen over the last 15 years. But the last 15 years we've had average interest rates which have been much higher. So if I do a proper valuation with today's interest rates, equities look cheap. Not as cheap as 2 or 3 years ago, so it's getting more and more difficult to find the right stock picks. That's why you should go active. In terms of demand, I think there's still a lot to come, still a lot of money to be invested into equities. Every bond expiring gives you a reinvestment problem. You can't buy a bond at an interesting yield today. Central banks are still printing money every day. We have these old rules of thumb, how you should share your wallet into bonds and equities. I think these are changing because people realize they're not living until 70 but until 90. So your share of equities should be bigger than what you used to have in mind like 10 years ago. So there's a lot of structural drivers for the equity markets which can stay for many years.
It also seems that mergers and acquisitions are a key driver, but isn't this necessarily a US theme?
Well, obviously everybody has these big names like Apple in their mind because they're sitting on a large cash pile. But in terms of targets, Switzerland is a very international place. So, and the technology we have here is on a very high level. We have these fantastic universities, bring good startups later to the equity market as well. And I think these are very interesting companies for these large companies outside who sit on a large cash pile. And especially for US firms, it can be very interesting to have a footprint here in Switzerland for tax reasons as well. There was this discussion of Monsanto going for Syngenta. It's not a very hot topic today, but it can turn up again. So no, definitely Switzerland will play a part in it on either side. And I think definitely on the passive side as well as a source of targets. And I'm absolutely convinced in 12 months from today, not everything which is listed today will be listed anymore.
Okay, now earnings season has started. What have been the biggest surprises for you on either side?
Earnings season is very young, so I like the companies who come quick with their earnings. That shows that they have their numbers in order, they know where they stand. Positive surprises, I think a very good sign we've seen from ABB, showing a very decent increase in their orders, base orders, large orders on both sides, which is a very good sign for the world economy in general. So all these economy plays should see good half-year figures now. I did like as well the numbers from mid-caps, Temenos and AMS, two big holdings in my portfolio. Temenos is telling that banks are now going much more behind big projects, so they expect tier 1 and tier 2 players to go for the new banking software. We haven't seen that for many years, so this is another good sign for the sentiment we have in the market. On the negative side, it's banks. I mean, there's still so much headwind for the banks. When the US fine is paid, you got issues in France, FX trading, dark pools, high frequency trading. The next thing will come up every month. There's a new issue, so there's headwinds only, and I think the sentiment is still turning more cautious and more cautious. So I'm not holding a lot of banks in my fund.
Okay, and in your fund, what have been your biggest bets and why would you still buy them today?
Let me just focus on the 3 biggest bets, which are AMS, which I mentioned before. It's Implenia as well, and I got a lot of George Fisher in the portfolio. AMS just released very good figures. They it's not official, but everybody knows it, that they're selling their NFC solution to Apple, and the iPhone 6 will be launched soon. So this will bring them like a third of their turnover with Apple. They are very strong in the healthcare area. They're selling a lot of their products into automotive, like Continental, which again is providing security or safety solutions to companies like Ford. So there's a lot of momentum in the end markets there. They're a technology leader, they're the market leader in terms of market position. They have a very clean balance sheet, and that holds true for all these three companies. I like clean balance sheets, and I like strong market positions. So I mentioned Implenia, which was a disappointment in terms of figures, and that made the stock so attractive in terms of valuation that I've built up the position there. I think on these levels it's just one of the most attractive stocks we have in Switzerland. The market leader here in Switzerland, they have a decent position in Norway, which is a very rich country to build roads and tunnels and bridges. I like this one still very much on today's levels. And talking about Georg Fischer, the market leader with their automotive solutions, helping the companies, the cars to save weight, which will bring the CO2 levels down, which is the main driver for technology innovation in this sector. And for the first time, their piping unit was the biggest unit in the firm, just underlying that the company is not that cyclical as many investors would like them to be. And the valuation I see today is that of a very cyclical stock, and it isn't. So that's I think this one is still a very attractive investment as well.
Fantastic. Urs, once again, thank you very much for joining us.
Thank you very much, Ben.
And thank you for watching. Do make sure you keep coming back to Dukascopy TV as we bring you plenty more updates and exclusive interviews. Bye for now.